Hey guys, what's going on? In this video, we're going to talk about trading earnings in 2024. Earnings season kicked off Friday with a few financial institutions reported earnings. At this point, I'm going to lay out the strategy of how you can profit going into the week of Monday, January 15th through Friday, the 19th. We're going to be trading futures Monday. There's only one company we're going to look at on Monday, which is UMC. Tuesday, however, we're looking to put on 2 trades on Goldman Sachs and PNC. Some of the other stocks, they're just here for observational purposes. So when we log in on our earnings calendar and we log in a stock here, it doesn't necessarily mean that we're going to trade it, okay? But sometimes what you want to do is get a good measure of some other stocks within the same sector that are reporting. This week, we're basically focusing on banks and some oil companies are beginning to report. Basically, some majority of them are going to be regional banks, and based off the charts, we're going to glance at a couple of charts, guys. The trades look really interesting considering the context that we have gotten Friday. Okay, we're going to look at a few banks that reported Friday right now, so you get an idea of the overall move. So when we're talking about the context of how do you trade this earnings reports next week, first thing you want to do is identify what is the most common move, okay? And so if you were to work with a coach, guys, you would be able to record with your coach what is the predominant move for the week based on all these companies reporting. You'll be able to calculate that in a statistical way. And then also basically you observe the behavior. The behavior is basically what move is developing after a company reports earnings. And so sometimes most of the traders, they focus on the wrong stuff, which they focus on what's in the earnings report. So oftentimes you'll have great earnings report, the stock will drop. You'll have poor earnings report, the stock will go up. So most of the, especially newer traders, they're puzzled. How can someone drop on a good earnings report? How can something drop on a good earnings report? How can something go higher on a bad earnings report? So as a trader, what you should be focusing on is trading the earnings reactions and the behavior. How does the market respond to the report? So from the investing standpoint, yes, you should start at the reports, but from the trade and short-term trading, okay, we pay more attention to the behavioral patterns and how the move is evolving in order to nail your day trade, your swing trade. Most of these trades are going to be trading that same day. We're going to be getting into it, getting out, or we're going to be holding it for a duration of 48 to 72 hours. So, guys, got some really interesting stuff that potentially could be developing on Thursday. TSM, PPG, JB Hunt normally does really well during the earnings report as far as the size of the moves. Okay, so, but for the same reason that some of the other companies that are reporting, like KMI, okay, yeah, it's an oil stock. We're going to be watching it. Alcoa. These stocks, they don't move. Okay, so most of the traders, they're like, well, hey, is it going to be good earnings or not? Hey, I'm buying calls, I'm buying puts. Okay, first, what you should be doing when you're trading earnings is never trade a company that doesn't move on earnings. And it's really easy to go back in the history and look at a daily chart or weekly chart and see what is the biggest move the company has ever done. So you don't go in and put directional earnings strategies on companies that don't move. So it doesn't matter what the news could be. The company's just going to move plus minus $1. That's not going to make you anything. It doesn't matter if you're bull, bear. It doesn't matter if the stock does not move. You got to be able, the whole purpose of trading earnings is you got to be able to get an outsized move, and you got to be able to combine the chart history into understanding, well, first, what is the probability that a company can actually make an outsized move? Has it had any prior history of making a move that, let's say normally a stock moves $2, $3 a day, but on earnings reports it moves $8, $9, okay? And you can do some research based on the charts in the way we explain everything in our charts diversity course, and you can kind of see, okay, some stocks are going to be positioned for bigger moves in relation to what's been happening in the chart. And so those are the companies you go for. So considering some of these things, we're not looking to trade everything, but every stock here is going to give us some kind of insight at what overall the sector is doing. We're going to be able to keep track of the moves. And at the end of the week, we're going to have something that's going to be of statistical significance, okay, because we're analyzing a couple of different sectors. But the goal is to identify the prevailing move based off the facts. Now we're going to look at the companies that reported Friday to give you an idea of the context of what the predominant move could look like going into this week, January 15th through January 19th. Okay, Citigroup was one of the companies reported last Friday, and we've got a clear move to pattern. After earnings announcement, the stock goes to the moon from basically $50, close to 50, all the way to almost 55. But through the rest of the day, at the open, it jumps one more time, but through the rest of the day, it drops, attempts another bounce, and drops. So overall, from a top of close to 55, it finishes at 52 after reaching a bottom at around 51 for the day. So this right here, guys, this would have been your trade, right? So, and when is this reversal happening, right? If you paid close attention to some of the videos I've recorded on the move to formation, okay, your ideal time frames would be to enter at 9:52, okay, 10:21 and 10:52. So that's exactly where most of the reversals are going to happen. With earnings, if you see a huge pop like this, it is based off how these things are developing. You may want to use a 9:34 time frame. So give it about 4 minutes to jump higher at the open and then go ahead and place your short. So even though this stock ends up 54 cents positive for the day, this is, if you study 13 market moves, this is a red move. This is a bear move because what people are really doing, they're shorting the bounce, they're selling. When something goes up, the initial reaction is higher on these earnings reports, okay? People are dumping into the price strength action here. So as a result, as more people are selling, the stock ends up lower. So again, nothing said here about the report. What you want to do is focus on the reaction and trade the reaction. So if the initial reaction is higher in some of the financials that we're looking to trade next week, what you want to do is you want to time it within the first 4 minutes from the open. You want to short them. And I kind of jumped ahead here, but let's look through the rest of the company. So on Citigroup, we got a move to, which is a red move. Okay, it represents a bounce followed by heavy selling in the first 2 hours after the open. That's your trade. So you know the time frame of the trade. You get in at 9:34, you sell your position out by about 11 o'clock, okay? That's your trade. Next one is JP Morgan. We've taken a look at this one. You got a similar pattern, okay? It jumps right at the open to the moon, almost 176. This was our 17x trade. Same thing, your time frame on this one a little bit longer. By lunchtime, it hits the lows, it revisits the lows one more time into the close. But the point is, you short it when the first 4 minutes of the open. It is a move to, okay? And basically it dips. It tries to attempt to bounce once, sells off more. Second bounce, closes at the lows of the day. Move to formation on JP Morgan. What was said about the report? The report was great, okay? Strong quarter for JP Morgan, but yet, okay, everyone is selling into the strength, which is one of the signs of the top. And if you were to compare this 2-minute, 2-day chart, well, clearly it screams that 176 was indeed the top. And we're going to likely find out that 176 is indeed a multi-month top on JP Morgan stock. So who else reported? Okay, we've talked about Bank of America, guys, another red move. In this case, we're looking at a move 11, okay? Initial reaction is low, it tries to bounce, but look at the context of the entire trade. Ever since we nailed the top at 34.54, I posted a video about that like literally 5, 6, 7 days ago. The stock does nothing but drops every day, and every analyst on Wall Street is trying to pump it up, and they can't do it. So after the company reports earnings, it sells off to a low of 31.35, but during the actual trading session, when we calculate the move from 9:30 in the morning till 4 p.m., overall it is a move 11. It tries to bounce to a level of 33.2 and then it drops. So guys, it is a red move. The stock ends up being 1% lower for the day from the prior close. It is a move 11. So far we've got Citigroup, move 2. We've got JP Morgan, move 2. We've got Bank of America with a move 11. And let's take a look at Wells Fargo. Okay, Wells Fargo right here, guys. The stock gaps down slightly to the prior day. It drops, it attempts to bounce, and then it drops again, guys. So as far as the mechanics of the move, you've got a gap down in relation to the prior day. So the prior day, the stock closed at around 49 and some change, let's say 49.18. It opens up closer to like 48. So it's a gap down of about one semi%, and it ends up today at -3, almost 3.5%. Okay, so again, this is not something we would trade, guys. Okay, things like that, they're not going to make you a ton of money. Okay, so there is a reason why I don't have every stock highlighted on our earnings list that we're monitoring here at 13 Market Moves, because not every stock is a good stock for trading options. But as far as the case here, now we've looked at 4 stocks, financials, that has kicked off the earnings this season, and they're all red moves. Okay, so we got Citigroup again with a move 2, bear move, sign of a top. JP Morgan, bear move, sign of a top. We've got Bank of America, move 11, sign of a top. Got Wells Fargo, straight doghouse, move 3. Okay, after it has recently also hit the top. So how can we utilize this information going into next week? Hey guys, this is another company that wasn't even on the list, but it is reported next week, and I didn't put it on the list. But last year, exactly about a year from ago, it had some big moves. Normally, regional banks, they don't move a whole lot, but last year when SVB Bank was going out, and a lot of banks took a dive with that. Basically, we had some big moves. We had some big volume. Look, normally there's not a whole lot of volume in this thing, but it just closed this gap, and there is a potential trade here. But the first of the regional banks, like that's going to be reporting, is going to be PNC. And PNC held up exceptionally well, despite of all the chaos we've had basically a year ago. So let's take a closer look at PNC here. The divergences here, this bear divergence I've been talking about in a lot of charts, it is definitely present here. This is definitely a sign of a top. This resembles head and shoulder pattern as well. You've got the bear cross right here on the MACD. You got volume accelerated on the sell side while the stock is trading in the range between 148 and 155, guys. There's probably considering that we know all the moves for the 4 stocks that are reported so far on Friday, there's probably a higher probability, okay, that this stock could gap down, okay? Don't expect like a crazy gap down. So you want to catch, ideally, on these trades next week, a move 2 or 11, because ideally you want to short the bounce. But when the stock, let's say this thing already gapping down and it's opening at 145, which is probably a 90% top of outcome, okay, what you want to wait is you want to wait for the bounce when it's going to look like, hey, they're buying the dip, it looks like they're going to run this in higher, and that's when you short it. But we've already known, we've pointed out to the top in JP Morgan, to the top in Bank of America, and this is a very well-defined top in PNC. So while the whole world is bullish on banks, hey, buy banks, okay, the train on banks is gone. It has left the station. And fortunately for us, the short sellers, the whole world doesn't even realize that, is not realizing yet that the train has left the station already. So let's take a look at the next one. On Goldman Sachs, historical, we've been able to put some phenomenal trades, guys, because this stock has a much greater daily range. Like look some of these moves. I mean, this is the stock that can move 10, 15 bucks on a day of earnings. So in relation to trading some of the other ones, okay, you're going to have a much better opportunity trading something like Goldman Sachs on the day of earnings. all the divergences are present here. Okay, we've got bear divergence on the RSI. We've got very similar top information as with PNC, even though this is an investment bank and PNC is the regional bank. You've got same cross, you got same volume uptick and acceleration on the sell side in the last few days. And so I would say there's probably a 90% probability of a move 2 or 3 on this one, guys. So it is important that you don't get scared. If this thing, and this is what you want to happen, if this thing begins to bounce, right? We already know that recently it's been trying to take that high at 380, 390. It has been unable to do so. Earnings could be a good catalyst for it to do it, but the ideal setup scenario when we're going to be trading Goldman Sachs is ideal. Let's say there's something positive in the earnings report that some institutional investors begin to bite on, and they say, hey, let's go ahead and buy Goldman Sachs. And let's say they run it pre-market to 380, 390. Well, if we're seeing some stalling action at that level, that would be a perfect entry, right? We shorted at 380, 390 on the bounce in the first 4 minutes of the open on the day of the report when the market opens. So there could be a really great trade here. This is my personal favorite, so I'm probably going to be trading this, and I'll be sending out the alerts, particularly to our paying member alerts, and definitely the guys that I'm trading with. I'll be watching all these earnings reports on Tuesday, bright and early, starting with 5, 6, 7 a.m. All these banks are going to be reporting, and I'm going to be watching the pattern that is developing pre-market. I will be watching the level to which some of these stocks are dropping, to which some of these stocks are going higher on bounces. And so sometimes your ideal entry is when that bounce happens on low volume and it coincides with a level such in Goldman Sachs stocks is 380, 390. This would be your ideal level to short something like this. So notice, just because the Goldman Sachs stock could be going initially higher, I'm not changing my mind. I'm not saying I'm going to go with a move 1 or a move 7, or the news could be super great. I already have the data, I already have the context, I already see that the top has pretty much been formed here. So any temporary movement to the upside in Goldman Sachs is a great shorting opportunity to us here at 13 Market Moves. So everything is here. There's enough ingredients and components on this chart to be placed in action next week within the reports. So if this makes sense, or you guys have questions specifically, if you're afraid that you will chicken out when it's going to be time to take action, because 99% of the guys do, this could be one of the greatest trades next week. I wouldn't be shocked, okay, if some of our guys will land a 10, 20, possible 25 action on this one. So let's take a look at something outside of the financial sector. Okay, guys, so we don't have a history or context of how transport companies are reporting earnings so far. So in case of the financial sector, we've got 2 precedents on Friday. In case of the transport sector, we don't have any data. We don't have a stat on what is the predominant move in the transportation sector. However, if you pay close attention to some of the videos we have posted, have pointed out the transportation sector has been topping out. Now, since I've pointed that, unfortunately, for those of you that are looking to put on the trade now on the short side, okay, they have dropped quite a bit. ODFL, JB Hunt, okay, these stocks have come down. Not a lot, okay, but unfortunately, you would not be necessarily shorting the top here. But what you could be doing, if by miracle of God this thing bounces and gives us a perfect entry on a move 2 formation, okay, this resembles a top information clearly, but this is also resembling a head and shoulder in a way, because at the second top right here, within this overall top, the volume is drying out. That would be a characteristic of that. And unfortunately, what we don't know, sometimes these head and shoulders formation, they could go for quite some time on the sideway to build out this shoulder a little bit longer. Considering we've got a clear catalyst, which is the earnings report, okay? Overall, we're leaning towards the bear side on this one, okay? But The one thing that is a concern is this accumulation distribution. A lot of people have been selling this thing, okay, for quite some time now, and there's not a ton of people that could sell, okay, so that would be sort of a red flag for me to go big on something like this as far as position. So instead of maybe buying a few hundred contracts, I may just buy like 50 contracts on something like this, because not all the signs are highly bearish in this particular setup. But overall, this is a very bearish chart. I just don't particularly enthusiastic about this bullish crossover right here. There's some volume to the upside, which yes is followed by some red volume here. But overall, my main concern is where can we get a ton of sellers to exit at the same time here? So hopefully the earnings are good to where some people will bite and try to push this a little bit higher so we can catch a good entry and short it closer to this level, maybe at least 195, 197. Now, this is a stock that has a high probability of reversals during earnings. So in other words, if it's dropping like a rock, after the earnings report, basically if you see the stock is down 10 points, okay, I wouldn't gamble on this thing to go down another 10 points because it has a high probability of bouncing. If you study historically JB Hunt reports, which we do here at 13 Market Moves, okay, on any 10-point drop in the stock, it can produce a move of $8 to $9 to the upside immediately after that. So if you're coming in Thursday night or that would be Friday morning for you to trade it, and you're looking at this and you're like, wow, this thing is already down. Oh shit, sure enough, it's going to drop more. It's probably not going to be your ideal setup to trade this. The ideal setup to trade this, if it bounces 8 to 10 points higher on low volume, this could be a great entry for you to short it at that point. So notice, I'm not looking to be buying calls in this thing in any type of circumstances. Overall, I'm going to be hunting for a good entry in a move 2 type setup. And if it ends up being a move 3, then I'm going to be looking for initial bounce, recovering some of those pre-market drop so I could nail the entry before the stock reverses again and sells off more. So this is something that, guys, you should really pay close attention when it reports earnings and look at the immediate reaction and the size of the move pre-market or after market when it reports. I think it reports Thursday night, and really zoom in on that to try to understand what type of size of the move you could be expecting the next day. But considering not so distant history of the stock, there was a moment when it dropped from close to $200 to 185. So this stock historically can make a $15 move in one day, which is huge for a stock that's trading at like a 200 range, right? And notice another important factor is that the following day, it drops like another almost $10. So within 2 days, remember when I started the video, I told you most of these trades were looking to get in the morning after the earnings report, okay? And we're not looking to buy any calls or puts ahead of the earnings here. And we're looking to stay in the trade anywhere from 2-3 hours from the open to potentially, 48 to 72 hours. So when you see something like this in a history of this particular stock, when it is capable of dropping not just one day in a row, but multiple red days in a row, okay, analyzing a chart like this helps you understand, well, if you nail your entry on JB Hunt, okay, and let's say it pumps to 197, you get in, within 30 minutes it's down to 187, you're going to be happy because you're going to be making a ton of money. And this is the moment, okay, that a lot of traders are like, oh yeah, Leo, I'm making 12 grand, I'm fucking happy, let's jump out of here. And at that moment, I'm going to be like, no, fuck no. Hold the trade till the next day, because when I tell you to do this, I've already gone and I've studied some of these time frames on these charts where I see a history of the stock once it does something, it has a tendency to continue in the same direction, right? Recently, we've seen 1, 2, 3, 4 days in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. Other recent history, 1, 2, 3, 4 red candles. So when it gets going on the bullish side, it's also 1, 2, 3, 4, 5. 1, 2, 3, 4. So if you overall, okay, get in a red day on the earnings report, the probability that the stock is also going to drop the second day is highly elevated. So potentially you could be, like, this is probably the best case scenario, you could catch a $25 move on this thing within 2 days. But if you just stay and you catch just the initial part of the move, sure, you're gonna be green. But guess what? That is why you're not getting a 20x trade, because you're lucky that you're up 3x or 4x in the first few hours. And that's how you're happy to jump out prematurely out of the trade that on the chart clearly spells out that if you hold it for just another day, this is how you're gonna nail a 10-20 exit. So guys, I invite you to study the chart with a 13 Market Moves coach. I invite you to trade these earnings next week. I invite you to nail these entries with us. Guys, this is the best way to learn how to trade earnings. Nobody has a system that is so simple, okay, that gives you a high probability outcome of nailing these trades and also gives you a clear path of why you would want to hold for more than a few hours, or in case of Bank of America, right, why you wouldn't want to trade it at all, or in case with JP Morgan, okay, why it would make sense to stay for 3 hours in a trade. Okay, so guys, there's a lot of elements that are just, they're details, but it's the details that make a difference between somebody put in a 2x or 3x trade and between somebody put in a 10x or a 20x trade. So I invite you to set a personal challenge for yourself in 2024 to be the guy that will nail multiple 10x and 20x trades. It doesn't matter, okay, your trading history in the past. When you come to 13 Market Moves, I want you to forget everything. I want you to embrace our system. I want you to execute and implement precisely, okay? And that's how you begin to trade like a rockstar, guys. I'll catch you in the next video soon. Make it happen. 2024 earnings season kicks off. Make it count for yourself and your trading account.